appreciate her as a human being and for what she does. I work as a CPA. I help small businesses and individuals, as well as trusts and some private foundations, with their tax planning and tax needs. And so the last few weeks have been really busy answering questions about what's available for businesses with the economic stimulus acts that have passed recently. So I look forward to being able to share those things with you today.
Awesome. Thank you, Courtney. We are, it looks like, oh, hang on just one second. Okay. We're just after noon, so I'm going to give just a couple of minutes. Does anybody hear feedback? I'm hearing a lot of feedback. Yes, no?
Feedback.
Just a little feedback, okay.
I think I heard it when you were talking, Lisa. I wonder if there's an echo.
Yeah.
Not anymore.
Yeah, you're not, I don't hear any feedback from you. That's interesting. Okay, it seems to have gone away.
I don't hear it anymore.
Okay, so I'm sure we'll kind of have some people joining us as we go throughout this, but, and I will watch, make sure I can get everybody admitted to the room. But first of all, thank you for joining. I am not gonna lie, I was a little bit nervous, like just throwing this out there last minute. Jenny, if you can wave your hand, say hi, Jenny. Jenny's my assistant. She helps keep us all going. And Maddie, will you wave your hand? This is Maddie. Maddie is all things digital media for digital marketing for Sherpa. So she's amazing. These two ladies helped me keep going. And we were having our little meeting about a week ago. I guess it was last Friday, wasn't it? And just trying to decide. I have been getting so many phone calls and texts and emails from not just current clients, but from friends and past clients and people just that I interact with about, am I going to lose all of my equity? You know, I'm building a house. What's going to happen in a year from now when the house is completed? Lots and lots of questions about, you know, what is COVID-19 going to do to the real estate market? So I was trying to brainstorm as to what the best way to get that information out in a succinct and clear way to multiple people at one time. So this is what we came up with. But I also did not want to hear myself speak for an hour for 8 weeks in a row. And I really don't think you guys all want to hear me speak for 8 weeks in a row. And so I thought, what better way to bring some value to all of you that I care about so much than to bring some of my favorite people to you that I think can add a lot of value. So as we brainstormed through a lot of the things that we think people are asking questions about right now or could really be helpful and valuable to you right now, we came up with the list that you see on the website. So bear with me. Probably not a good idea to do this first one on Good Friday when I decided to fast today. No food and some nerves are not a great combination. But anyway, so thanks for hanging in there with me and for joining us. I am going to, basically the format is I'm just going to go through some quick update or current stats for the local real estate market. And if we have any questions, we can go into those. And then I'm going to lob it over to Courtney to go into kind of the stimulus packages and the benefits that you may be able to take advantage of from there. So I'm going to share a couple of screens with you here. First of all, let me, let's see here. Okay. Can you guys see this March inventory screen here? Cool. So really, the first thing that I want to do is just talk about understanding right now, we don't have enough data to really determine what impact COVID-19 is having on our real estate market. It's important to understand that really to have any sort of legitimacy to your stats, you really need to have at minimum 30 days. And we just don't have that yet. So as a caveat, I want you to understand that some of what I'm going to explain to you is anecdotal. It's, you know, I'm obviously out there selling homes every day. Thankfully, as of right now, I am still have a lot of active clients and have not seen a big slowdown personally. However, I want to show you from a stats perspective, as well as from just kind of, like I said, anecdotally, what I'm seeing out there in the marketplace. So as we all know, the basis of economics is supply and demand. And supply and demand as it applies to the local real estate market here along the Wasatch Front has been heavily out of balance for several years now. I'm looking at a few of your faces who I've had the pleasure of helping through real estate transactions, and I'm sure you would concur as a buyer. It's been a bit frustrating over the last several years. As a seller, it's been awesome, right? It's been a seller's market. The supply and demand has been way out of balance. And one concern is obviously, as you look at something like this, an economic recession that has nothing to do with the real estate market itself, right? It's forced upon us all through this virus. In a unique nature, we're being forced to injure our economy for the betterment of the health of everybody. So one of the questions and fears that I hear from people is that supply and demand going to totally topple? Are we going to see a significant increase of inventory as people have a fire sale, so to speak? And is the buyer demand going to fall off? So that is one thing that I am obviously paying close attention to over the next several weeks as we go through this COVID-19. My gut tells me, no, we're not. We are going to see quite the opposite. I do think that our buyer demand is going to be injured quite a bit simply out of a lending perspective. And in a couple weeks, we're actually going to have Missy, who is on the call today, is one of my absolute favorite lenders. She's been in the industry for 25 years and does a phenomenal job. She's actually going to be the guest on one of these calls to talk exactly about that, understanding how lending is being impacted right now and how that might impact the ultimate market. But while we're watching lending get impacted to some degree, the demand and supply have not toppled. So right now, all we have in terms of a full month is March. Well, only about half of March was impacted by COVID-19, right? So it's not pure numbers. We can't take these at face value, but this is our base point. This is where we're starting. So as we go over the next 8 weeks, we are going to have some solid days of data to compare. So this is our baseline. So March inventory, and this is MLS statewide. I'm going to narrow it down in just a moment to Salt Lake County. And I definitely will, I can give you Utah County data and Davis County data as needed. So if you want those specific counties, just reach out to me and I can do that. But for simplicity fact, and given that's the largest part of my marketplace is Salt Lake County, I'm going to stick with Salt Lake County today. So as a whole, MLS wide, so statewide, we had in March of 2019, we had 8,355 homes on the market. So that was the supply, right? And this is all housing types, all of Utah. In 2020, in March, we ended up with 7,782 homes on the market. So has our inventory increased in the wrong direction? No. Now, this is a double-edged sword. This is a problem. Low inventory is a problem. It injures our housing affordability, right, which has been the crisis that we've been talking about for a couple of years now, housing affordability continues to be challenged as low inventory continues to persist. And there's lots of reasons behind that we can go into it at another time. But so a decrease in inventory in March. So outside of, exclusive of the fact that that's a negative when it comes to housing affordability and supply and demand being in a balanced place, that's a positive as it relates to, we're not seeing a fire sale, right? We're not going to come out of this, in my opinion, with way too much inventory and therefore loss of equity. So that's one stat to look at. How many of those are going under contract? Well, we actually, believe it or not, in March, now granted, remember, February was a record month, right? And it was like screeching, like everybody got sandblasted with the COVID-19 situation, right? So in March of 2020, we actually saw 1,000 homes more than 2019 in March go under contract. So, and that's a 5-year high. So again, how many of homes are hitting the market? We're still undersupplied, and 1,000 more of those went under contract in March of 2020 than in 2019. So that's good news. So let's look at April. Again, this is a snapshot, right? Because we only have 10 days of data, really 9 days of data so far in April. So for the first week in April of 2019, because we're going to compare year over year, 2019, the first week in April, we saw 293 homes sold at an average of 98% of the list price, meaning if the list price was $100,000, it sold for $98,000, right? And the average days on market in 2019 was 16 days. So far, for the first week of April in 2020, we've seen 260 homes sold with an average of 100% of list price. That is an important number. This is strictly a small snapshot of data for the first week of April. So on average, the sellers that have closed in the first week of April got 100% of their list price. However, here's the caveat. As we know, real estate doesn't happen overnight. It's not real time like the stock market, right? It's there's an escrow period of typically 30 days or so. So that number right there, we're going to closely watch over the next 8 weeks and see what happens to that percentage. Because 30 days from now, we can assume that those numbers were people that went under contract this week. I hope that makes sense. So here's a good number though, that is real-time data because it applies to the actual homes going under contract in this first week of April, only 7 days on market as an average. Okay. Now again, this is Salt Lake County, all housing types, all price points. Okay. I cannot, Jenny, will you do me a favor because I'm focusing on this presentation. I'm not watching the chat. Will you just watch that and let me know if there's chat boxes that pop up?
Yeah, for sure. We're all good right now.
Okay, thank you. Okay, so here's another real-time data point that we're watching. We don't have the ability to see. Did somebody just say something? Oh. Did somebody just say something? So we don't, one of the real-time data that we're able to watch is how are showings being impacted. Now, I'm a big believer of remembering that, how do I want to say this? Every stat has a story. And understanding the story behind the statistic is very important. You cannot just solely focus on the statistic itself because oftentimes there's stories behind it, right? And I think that this is one of those. So if you look at, so what Showing Time is the online showing service that is connected to our MLS. So agents are able to schedule a showing for their buyers on a listing through this service, Showing Time. I use it on all of my listings. And when we rolled this out in the MLS, we had about a 74% adoption rate. So we have a lot of our agents using it. Couple of things that is the story behind this statistic. One, a lot of buyers are doing virtual showings and not stepping foot in the home right now. One thing that I'm doing on all of my listings right now is a virtual open house where I do a live Facebook open house, and then we link that and continue to use that video. And then also something that lives on the MLS listing on my listings right now is a virtual 3D tour. It's a Matterport 3D tour. A lot of people are using those virtual resources right now so that they don't have to physically leave their home and go walk through homes. So understanding those caveats, this is still an important stat to look at. And if you look at right around March 12th, so the blue line is the showing activity weekly average in 2019. The orange line is showing activity weekly average in 2020. Clearly, there are far less showings, physical scheduled in-person showings happening right now than there were in 2019, like a significant amount, right? So as of yesterday, because it's real-time data to a full day, as of yesterday, that activity is down 42%. So 42% fewer scheduled showings on the listings. That's got to have an impact. I can tell you in the last 2 weeks, 1, 2, 3 listings that I've had go live on the marketplace, 2 of them went under contract within the first 7 days. 1 was in the first 3 days. The third is listed at $650,000, which we'll talk about in a moment why that number is important. It's above the conforming loan limit, which means that buyers, unless they have the down payment amount that allows them to go under the conforming loan limit, which most cases they're going to in that price point, they could be forced to a jumbo loan. Jumbo loans have seen a significant impact in the marketplace because investors in many cases have pulled their money back. So that can be an underlying reason why the one home that I have listed at $650,000 has seen fewer showings than the other homes that have been listed under that. So there's another stat. This is a big question that I'm getting a lot of. The question is, are we going to start seeing a fire sale, right? Buyers for a long time have been saying, I'm going to wait for the market to crash. And I internally have to chuckle a little bit going, you're going to be waiting for a long time. None of the economic factors are telling us that the market's going to crash. During this unique time that we're facing, the question is even more so right now. Are we going to see, because of the decrease in showings, are we going to see a bunch of price revisions start happening? So we're going to watch that. Again, so far, we don't have enough days of data to really make a solid estimate as to whether that's going to be really impacted or not. However, for the last 30 days, excuse me, I went through and physically counted one by one how many price revisions we've had in the last 30 days over all housing types, all price points in Salt Lake County. So for the last 30 days, we have 1,163 homes on the market active. Of those 1,163, we've had 72 price revisions. 7 of those price revisions was actually an increase, which is a little funny. We see price increases typically, one, with new construction, A lot of builders will list their spec homes on the market at the beginning, and then as they go through selling through phases, they increase their prices each phase, or each 5 buildings sold, or each 10 homes sold, or whatever. And so if they have a spec home on the market it's listed while it's under construction, oftentimes they'll increase their price to reflect those price increases on the MLS. That's one reason it could be increased. Secondly, it could be sometimes, for example, I just had this happen on one of my listings. We listed it at a certain price. We got multiple offers, went way above list price. So we ended up under contract above list price. Well, that contract fell out, but it appraised at that amount. So when we went back to market, we went to market at that increased price because it had appraised at that. Funny enough, when we went back under contract, we actually went over that list price again. So that could be a reason. So there's a multitude of reasons why you might see a price increase, but obviously that's an insignificant number, 7 increases. The more significant number we want to look at, is 65. There were 65 price.
Oops, sorry. There's a question that came up that how does that compare to price changes in a normal market?
I knew that question was going to come up. Unfortunately, I don't have a way to track that. So we're going to watch it from here and see how that changes. So we've got to create a baseline right now and then watch over the next couple of weeks how that changes. So good question. I knew it was going to come up. I wish I had comparison data for you, but I don't. Just anecdotally, I would tell you this is pretty normal. And one of the reasons we see price decreases happening in a market that's hot, like if you go pre-COVID-19 and consider price adjustments in the hot market that we have had, well, why does that happen? Well, let's face it, in a market like this, people push prices. They say the market's so hot, people are getting multiple offers. Let's test the waters. Let's push the prices. And when that happens, you see some price decreases, right? The thing I want you to look at specifically is, one, those 65 price adjustments that were in the downward direction only represent less than 1% of the total active homes on the market. That's a small number so far. We're going to watch it. Of those 65 price adjustments, a question I was curious about was, from a lending standpoint, there's a couple of unique things happening with the lending market. One, jumbo loans are being impacted. I mentioned that. And therefore, are the price adjustments going to be in the luxury market? Is that where we're going to see the impact? Well, not really. We saw 13 price adjustments in the above the conforming loan limit. I put conventional, I meant conforming. However, I wrote it down, only 4 of those price revisions were above 750, and that's what I would consider the luxury market. So doesn't seem to be impacting us too much there. We're going to watch it. However, FHA loan limit in Salt Lake County is $416,300. Why is that a significant thing to watch? Well, government-backed loans are being impacted right now because underwriting guidelines are changing. So as they look at potential of the unemployed not making their housing payments, their mortgage payments, all the different factors that are happening in the market right now, they're discouraging some of those loans. So they're making it more difficult to get those loans. So in theory, you would think that FHA loan price points on the market would be pretty impacted by this. Well, this tells us that the majority of those price adjustments were in that area of pricing. So again, this is a baseline. We're going to watch this week to week moving forward. So I am going to stop sharing my screen now and hopefully get you guys, okay, hold on one moment, sorry. Okay, so one more. Okay, that was the question. So anyway, I hope that was helpful. You'll find out I am not a fan of stepping outside of my lane. I try to stay in my lane and not be an expert on anything that I'm not. And I also I'm not a fan of predicting, right? We're gonna make decisions based on data and really watch it. So hopefully that was helpful. That gives you a quick snapshot of what's happening. I'm gonna bounce it over to Courtney and have him go through something that hopefully will be super beneficial to all of you, and talk about how the stimulus packages can maybe benefit you. So Courtney, I will bring up your presentation here and unmute you. You can have at it.
All right. Well, this is really unusual. There are things that I've never seen before in 20 plus years of doing taxes for people. And this is so different from the 2008 recession. There was reasons for that. This one is just all of a sudden, it's as one person put it, it's a cliff we stepped into that we didn't see in advance. The 2008, we kind of drove ourselves into that. Right. And could have predicted that, but this is something unusual. So kind of what's in it, I wanted to talk kind of the what's in it for me, because that's what people care about, is how does this stuff impact me? So there are resources for individuals, and then there are resources for businesses. I'm not sure how many people we have on the call who own businesses. That might help to know where I want to spend most of my time. But let's start with individuals, because that impacts everybody. So the first thing we see is the stimulus checks that you may have heard of. This is $1,200 per taxpayer. And it's not free money, it's an advance of tax credit. So if you're old enough to remember back to 2008 when they gave out some stimulus payments, this is money that you have to pay back if your income is over a certain amount. So if you're single, if you make over $75,000 in 2020, you're going to have to pay back some of that money. If you're married filing jointly, if you make over $150,000, you're going to have to pay back some of that money on your tax return next year. But it's to give you some money now to keep the economy stimulated and growing. So it's $1,200 per taxpayer, and it's $500 for qualifying dependent. And what that means is 16 years or younger, you get $500 for a dependent on your tax return. So what if you claimed a dependent that is older than 16 and may even have filed their own tax return? If they're claimed as a dependent, there won't be a check for them. So if they didn't file their own tax return, not being claimed as a dependent elsewhere, then they'll get a check. But if you claimed them as a dependent on your tax return and they're over 16, there won't be a check for them. So that's the stimulus check. When is that coming? I've seen screenshots of people saying it was hitting their bank accounts, but I also wonder if those are photoshopped, because I've never heard of anyone I know have yet received them. It's anticipated that they're going to come out near the end of April, the first part of May is when those should happen. So if the government has your bank account from your tax return, your 2018 or 2019 tax return, if it was filed before the cutoff date, if they have that direct deposit information from your bank account, they'll direct deposit the amounts. If they don't have that information, then they'll send you a check. So what happens if your address has changed? Well, we've checked with the post office, and they will forward the mail. And they will forward the mail for you. So make sure that you have that address change form filed with the post office, so that if the check goes to your old address, it gets forwarded to the new one. So you just saw a question there.
Yeah, if someone is 16 and files their own tax return for 2019, will they get an individual payment?
If they were not claimed as a dependent by their parents, and if they filed their 2019 return before the cutoff date for when the IRS is going to look at income. So they said they're going to look at 2018 unless people have filed a 2019 return, but they didn't say when that cutoff period is. So we don't know. for sure. So I can't tell you what that date is to know if it was filed before a certain date, whether or not if it was filed before that date, they should get one if they weren't claimed as a dependent. So there's a box that you check there. Can someone claim me as a dependent? And if that answer is yes, or if you were claimed as a dependent, then you won't get a check. So the other thing that's impacted individuals is really everyone has more time to file their tax returns and to pay their taxes. So we've seen income tax filing extensions pushed out before. I have never seen payments pushed out before. So this is new. So everything that was due on April 15th is now due July 15th. And until yesterday morning, the second quarter estimated tax payment, which was due on June 15th, was still due on June 15th. So before your first quarter was due on July 15th. But yesterday morning, the IRS put out a new notice, and that in turn has also been moved to July 15th, which means don't file a second quarter estimated tax payment, just file a really big first quarter estimated tax payment, because it's due on the same date, and you'll get credit, more credit if you file it under a first quarter than a second, or split them between the two. So that applies to any business returns or trust returns or private foundations, nonprofits that were due before are now due July 15th. So those April 15th deadlines and the May 15th deadlines for some nonprofits are all pushed to July 15th, as well as the opportunity to pay. Also, the federal government has kicked out some additional unemployment money. So if people are laid off or furloughed and are claiming unemployment, the federal government is kicking in some unemployment cash to states, which is supposed to make those unemployment checks larger than they would normally be, upwards to $600. So I know that we've all seen the numbers. There's a lot of people claiming unemployment. I have not spoken with anyone who has recently to know how their payments have been impacted. So another thing is if you're over 70 and a half, you're required to make required minimum distributions from your retirement accounts. So for 2020, you don't have to take that. So that's a big benefit. Normally the government forces you to take a certain amount out as a required minimum distribution, and you have to pay tax on that. This year you don't have to take that. So if you don't need the money, you can leave it in your account, which is good because the market's down low, which means that you would have been forced to sell stuff at a low point in order to make that distribution. This allows you a chance to kind of recoup those losses in the market as things get better. And in talking to financial advisors, granted we don't know when, but everything in the economy prior to this was healthy. So they're expecting that once we get control of this, the economy should start to swing up pretty quickly. But granted, it's still a crystal ball at this point. Another thing is if you need to take money out of your retirement account to live off of, so before you're ready to retire, there are not early distribution penalties. So if you, in the past, if you took out an early distribution, you'd have to pay the income tax on that distribution as well as a 10% penalty. So that 10% penalty is waived for the first $100,000 that you draw out early. You can also take a retirement loan from your IRA or your 401k, if allowed, up to $100,000 and pay it back within 3 years and not have the penalty on that or the income tax on that amount. So those are some nice things to access some money that's locked up in retirement right now. Another thing is if you have student loans, they've suspended student loan payments and interest, and I believe it was for 6 months. Double check that. Yeah, through September 30th. So you can hold off making those student loan payments and interest. I believe they're not allowed to accrue interest. So it's suspended. So
the note I have from that is payments of principal and interest for certain federal student loans are suspended through September 30th. So it says principal and interest.
Okay. And then the other one that happens is if you have a financial hardship, there are options if your mortgage is federally backed to get a forbearance of 180 days. So in other words, you can, if you've got a hardship, you can request from your lender, if it's federally insured, a 180-day extension to not pay on your mortgage for that during those 6 months, and another extension for another 6 months if necessary. But you do have to prove financial hardship as a result to get that. So people who are renting, this is where you want to be open and talk with your landlord and really, tell them that you want to be there long term, but you're having a hard time. So and some people are flexible and others are not, but the more you can work with them and have a path or a trail of working with them, the better off it will look for you when things they can't foreclose on you for the next 60 days either. So you're in for at least 2 months. So that's kind of the individual thing. The biggest impact really is probably the stimulus checks and the extensions to file and pay your taxes. If you're in a refund position, by all means, file your tax returns. Get that refund now. So you can have your taxes prepared and file, and then wait to pay. Like if so the state, Utah, extended their payment. Not all states have extended their payment, given payment extensions. So if you have multi-state returns or are in a different state, you may need to check with your state to see if they've granted an extension for payment of state income taxes as well. So any questions on the individual side of things before I move to the businesses? Okay. So business side of stuff, we have income tax filing and payment extensions for businesses as well. This was all done after the March 15th deadline for a lot of businesses. So a lot of businesses have either already filed or extended, but we get some extra time to pay as a result. So with your, so that's a nice thing to get ready for. One thing I will say is that a lot of the loan programs that are out there require your tax returns as some of your documents that you need. So you're going to need to get those done sooner than later. Got an email this morning from a client who's been trying to get caught up on her taxes, and now all of a sudden she needs her stuff done because she needs it for a loan application. So plan ahead, don't swamp your accountant. So then the next is small business debt relief. So if you have an SBA 7A loan already, you can get 6 months deferral, or basically 6 months of your payments of principal and interest will be made for you by the government. So you basically get debt relief and don't have to pay 6 months, and they're footing the bill for that if you already have a loan prior to February 15th. So if you don't have a loan already, then that doesn't really apply to you. Then the next few things are kind of all interrelated, and so I wanted to talk about them. So the next one on the list is you can delay the employer payroll taxes. So basically, the half of the payroll taxes that the employer has to pay, you can hold off paying those this year and pay 50% of that in 2021, and the remaining 50% in 2022. So you're able to not pay the employer piece. You still have to remit the employee piece of that has been held out of their paychecks, but the employer piece you could keep and use that money knowing that you're going to have to pay it in future years, but giving you extra time to pay that money. However, if you can do that or the Paycheck Protection Program. You can't do both. So you kind of have to figure out which one is going to be more beneficial to you and go that route. So let's skip the employee retention tax credit for just a moment and do the Paycheck Protection Program. So the Paycheck Protection Program is basically they want you to keep your employees employed, even if there's a slowdown, and basically they're going to give you a forgivable loan for 2.5 times your monthly average payroll. So if you use the funds for payroll, for rent or utilities, but but rent and utilities can't be more than 25% of the loan value. If you use it for those things, then the loan is forgiven. So
and
that's
Courtney,
a great, yeah.
Sorry, just really quick. My understanding is that when you're talking about the average payroll, it's from March 2019 to March 2020. Is that right?
So that is what the SBA guidance says, so from April to March. However, because this is being pushed out by each lender, the lenders are different. So I've seen
Gotcha.
applications for just 2019 for the last 12 months. So it's really what the lender is comfortable with, because they're the ones who actually, while it's being insured by the government, they're on the hooks. They're using their capital. So each bank is slightly different. So I have seen both in applications so far. So you can use one of those two, delay the employer payroll taxes, or do the payroll protection program. That is a limited program. There's 349 million set aside for it. When that money is gone, the program ceases. So if you get in line and get an application done. Now, the application for self-employed individuals opened this morning. So if it's anything like last week, some banks are going to be a little slower to roll it out. So if you actually had running payroll where you're filing payroll tax returns and everything, that started last week, last Friday. Today, the self-employed application begins. So you have the option, if you're self-employed, to figure out kind of basically 2.5 times your monthly profit that you took home as a draw or a distribution, and are able to apply for the payroll protection program for yourself. Or if you, when you don't have employees, but you are self-employed.
And one more note, and again, this is yet to be seen, and you know, we're watching it every day, but my understanding is that while that money has been determined right now, Congress is lobbying to add to it.
Yes, this is kind of the snapshot. Tomorrow may be different, as this past 2 weeks have been. All right, the Employee Retention Tax Credit, the ERTC, is basically, it is free money, so it's not paid back. It is 50% of wages in a quarter, up to $10,000 of wages per employee between March 12th, 2020 and December 31st, 2020. So it's basically a maximum of $5,000 credit per employee that you have. And basically it's a credit that you can use to offset your payroll taxes due. So it may not be as much as the payroll protection program or an EDL grant, but some businesses, it may be more to take this employee retention tax credit. So to qualify, you have to have had at least a 50% reduction in revenues, and are kind of unsure if you're going to be able to rehire all of your employees. Whereas the payroll protection program, in order to get the forgiveness, you basically have to keep that same head count. We've had a lot of discussion. Does that mean we have to keep the same employees or just the same head count? And we don't know yet. So there may be, some poor performers on your team that get laid off that don't get rehired, but you hire some better people. Right now, we think it's just the head count, but that may change too as we get more stuff. So the retention tax credit, you basically are able to use those funds as a credit against your payroll taxes, and therefore are able to use that payroll tax money to in other stuff, because you're not having to make those payments. But you have to show at least a 50% reduction, and then by the end of the year you have to be, the credit stops once you get to 80% of the same quarter prior year. So if your business is only down 20%, then that credit stops. So if you're between, if you're less than a 50% reduction, and then once it gets up to 80%, then the credit turns off. So you kind of have to forecast a little bit of whether you get to use that. The other two big ones are the Economic Injury Disaster Loan, or EDL. This is up to $2 million. It's a 3.75% 30-year loan that you can get to help your business stay afloat. It is, you don't need collateral if it's less than $25,000. If it's more than $25,000, then you have to provide collateral, and you don't need a personal guarantee if it's under $200,000. So this may be a good thing if you have a capital intensive business that you need to have some loan money to help get you through things in some favorable terms. As part of that, there is an emergency grant, or basically $10,000. So the first $10,000 of your EIDL loan is considered a grant if it's funded that you don't have to pay back. So if you have a business, I would suggest that you apply for the emergency grant, as it's a $10,000 loan that you don't have to pay back if it's awarded. There is on the Hawaii Senator's website, not found it anywhere on SBA or any other place, but the Hawaii Senator's website hinted that this was going to be changed to $1,000 per employee up to $10,000 rather than a flat $10,000. So we don't know, but that's the source of that rumor, was the Hawaii Senator's website.
Quick question, Courtney, about that. Do you, with the EIDL loan, do you have to prove an economic injury? How do they do that?
So you do need to say that you have an economic hardship as a result of the virus. So the way it's written, it's really broad. I don't know of anyone who owns a business who could say that they haven't been impacted in some way by this virus. And so under those broad terms, I think most people who own businesses qualify for the grant. Then the other thing they're allowing you to do is under the Tax Cuts and Job Act that passed a few years ago, net operating losses could only be carried forward. They backtracked as a result under the CARES Act and are allowing you to take losses and apply them to the past 3 years. So basically, if you have had a loss last year or this year, you're able to go back into prior periods and get some of the money that you paid back as a refund. So give you a little bit more cash and use up that net operating loss, carrying it back rather than just carrying it forward. So that's kind of the quick overview, probably a lot to wrap your head around. Any questions? Concerns? So if you're a business owner, apply for the emergency grant. You can go to, I think it's, just go to sba.gov. Don't go to sba.com. That's not a government website. So sba.gov, and you can apply for the disaster loan. It takes about 10 to 15 minutes to apply for the disaster grant. And all of these things were supposed to be fast. Like the grant was supposed to be paid in 3 days after applying. And the EIDL loan was supposed to be 2 to 3 weeks after applying. And the payroll protection program was supposed to be the same day. But we have not seen any of these happen under those timelines yet. So I have heard of people starting to receive their payroll protection loans that they applied for last week. I have not heard of anyone receiving the emergency grant or their EIDLs yet. So things have just been swamped.
Yeah, and that's one thing I think is important to note with everything in life right now, but certainly, I mean, nobody, the SBA wasn't prepared to do this. These, you know, the systems and systems crash, people are in line. It's like, you know, the hours wait on the phone to cancel a Delta flight. Have patience and grace with each other. And I just think right now is not the time to get frustrated, albeit it's frustrating. But I also wanted to add, as when we send out the email as a recap to this call today, and Courtney, thank you so much. I cannot imagine the time that you have had to spend over the last 2 weeks diving into this. So thank you for the time spent, and then also the explanations here. We will put Courtney's contact information in the email. Please don't overwhelm him, but I'm sure, Courtney, you're open to some questions. And also, if you need a really good CPA, Courtney is definitely one. The thing I love about Courtney is not only is he a good CPA, but also, you know, when I went through the Goldman Sachs 10,000 Small Businesses program with him, the thing that I was so impressed by was his desire to help business owners, and help business owners from a perspective of understanding their numbers to make solid decisions versus just here's your numbers from your accountant. So if you're a small business and you need kind of that coaching aspect as well, Courtney is definitely the person for that. So reach out to him about that. I also will put this that you see on your screen now. This is a very quick snapshot of what Courtney was just going through and just an overview of some of the programs. So we'll link that to the email that has the recap on it as well. So before we jump in, as you might have seen on the email, each week we're also going to do, I'm a big fan of supporting local businesses in a normal market and certainly right now. So we're going to do a quick little giveaway at the end of each call. But before we do that, does anybody have any questions about the real estate stats I went over and or the stuff that Courtney just went through?
I will send you, Alicia, that you can also pass out or forward a kind of a summary of kind of who, qualifications, benefits, how much, kind of information about each one of those programs, kind of help you make decisions with. So that's in your email, you can forward out as well.
That's awesome. Thank you. Okay, so quick question. So we don't know what date we would have had to file taxes by for our dependent to be counted. But do we know if the date has already passed? Asking for someone who has procrastinated on their taxes.
We really don't know what date. They said that they were going to use 2018 as the base and then say if they filed the 2019, we would consider the 2019 return. But they didn't say as of what date. So I don't know.
Okay,
so
great question, Maddie.
Because we don't know yet, go ahead and if you're in a refund position, get your return filed now, and maybe it will count. But I really don't know.
Cool, thank you.
Okay, so Jenny has in the background here kind of taken, I'm assuming you've already done that, Jenny?
Yes, I have.
Okay, so Jenny's kind of assigned everybody a number, and what number are we through? 1 through?
1 through 12.
Okay, so Courtney, will you pick a number 1 through 12? Oh, you're muted.
Open up Excel and do a randomizer, so I'm not in.
Oh,
Oh, there you go. I thought about it.
Says 5.
Okay, so Jenny, who's number 5?
Kristen.
Oh, Kristen. Okay, so Kristen is the winner of a $25 gift card to any local business of your choice.
Okay. Just because I know they're really struggling and I know them personally, how about Cecilia Mia Restaurant?
Oh, that's awesome. Will you type that into the remarks, and then I will coordinate with you to get that to you?
Yes. Sorry, I just realized my face isn't on, so works. But awesome. Thank you very much. Thanks, Courtney, for the good information. And I also highly recommend Courtney for all CPA matters.
Sweet. Okay, cool.
Thanks.
Well, thank you, everybody. So next week, we are going to have a homeschool teacher who's been homeschooling for 5+ years, and she kind of has the span of age groups that she homeschools, as well as a teacher who's been teaching for 30 years. And so I will look at the same stats, but a week later, see how we can watch those week to week. So if you have any specific questions about your home in particular, or your market, should you or should you not buy or sell right now, feel free to reach out to me on an individual basis, and we'll dive even down more specific. But next week, we're gonna really go through just kind of some tips and tricks on how to keep your kids engaged, the best practices for connecting and communicating with your teachers, your students' teachers, And from a homeschool perspective, what are some cool ways that you can maybe keep them entertained and not just on screen time, things of that nature. So anyway, thanks for joining.
Thanks, Alicia.
Yeah, you're welcome. Thanks, Courtney, again. We appreciate you.
Thank you, Courtney.
Thanks, Alicia. Have a great day.
Have a great day, everybody.
Thank you.